Welcome to episode 5 of the Ashley Lay Real Estate Podcast. We're excited to have with us David Nishan from RMS Mortgage to chat with us about wise financial management, tips and tricks in the mortgage process, and whether or not now is a good time to buy a house.
Hi, this is Ashley Lay, and I'm here with David Nishan today from RMS Residential Mortgage Services. And he is one of our favorite lenders here at Ashley Lay Real Estate. And we're so glad you joined us for our edition of our podcast. And thank you for joining us today, David.
It was nice to get out of the office.
We're socially distancing here. So.
Yes. We wore masks coming in here.
So a lot of people are asking us, is now a good time to buy a house? And, I just thought that why not bring in David and let him address that? Let's go to this. I'm the source of the source. Here's the source. We brought you the source. So, David, is it a good time to buy a house?
It's definitely a great time to buy a house. First of all, rates are at an all-time low. Whether you're doing a government loan, FHA, VA, USDA, conventional, rates are great. The other thing about buying a home right now is while inventory is low, most people who are buying a home right now, if they don't own a home, we don't know what's going to happen in the election this year. We don't know what's going to happen with income tax. But if you don't own a home right now, and let's say you're a first-time home buyer, you need that tax deduction.
Yes,
what
absolutely.
People don't realize is the tax deduction, if you're paying $800 a month in rent right now, you can afford a $1,000 a month mortgage payment, and you'll end up netting more in your pocket still. So the biggest advantage of home ownership, I believe, is that tax deduction and the pride of home ownership, being able to do what you want with your property and not have to get a landlord's approval. But I would say right now, as far as interest rates, there's never been a better time to buy.
That's true. And David, I wouldn't recommend it to our folks, but I just bought a house last April of 19, and we put it under contract this week.
Yeah.
And making a pretty penny on it just after 15 months of being in the house. So
properties are appreciated.
That's what I wanted to say about all that, is that they are really increasing at just unheard of rates right now.
And that's due to low inventory and demand.
It is. There's such demand, and it's pushing values up every day.
Yep.
So.
Yeah, I agree. And as far as getting a mortgage, Ashley and I were just chatting about this earlier. It's so competitive out there when you go to make an offer. You really need to see a lender in advance, provide them your loan docs, get a pre-approval, not a pre-qualification, for two reasons. One is you'll have a stronger offer letter. When you're in a multiple offer situation, having a letter from a bank that says they've already reviewed your loan docs is critical. Mm-hmm. Of the 5 offers that Ashley may get on a listing, she's going to advise her client,
or 15, or 20.
She's going to advise her seller to take the one that shows it's pre-approved, not pre-qualified.
Correct.
The other thing is, if you're a buyer, I have a lot of people that say, well, we're looking at $300,000 houses. Mm-hmm. I always do a different point of view. I'm like, what do you want your payment to be? Mm-hmm. What's your max payment? And they say, well, we want $800 a month max payment. I'm like, well, then you shouldn't be looking at $300,000 home. And they're like, oh, we didn't realize what the payments would be. So for a multitude of reasons, people need to get pre-approved, get your lender to the point where they can close quickly. But more importantly, make sure you know your budget, what your estimated payment's going to be, what your estimated cash needed to close is, because I talk to a lot of clients and they say, yeah, we have $10,000 for the down payment, but they forget about the closing costs, the escrows, the attorney's fees, the appraisal, the home inspection. So we want to make sure that they're in a position that they know the numbers ahead of time. And we always find that it's a much smoother transaction that way.
That's right. And that's why you'll find when you reach out to when our viewers reach out to our team and ask us to help them buy a house, tell them that the first step is to come in and sit down and do a full buyer consultation with our team member that's going to be helping them with their buyer's agent, because they want to have someone working on their team on their behalf and working in their best interest. And so they need to hire that advocate. And then we team up with the mortgage partner, and that's the next step. So after you've gone through the full buyer consultation with us, we're gonna partner you up and hand you off to David here. And then David's going to help you with all those next steps that he talked about, because those are super important. And a lot of folks, when they call us, David, they'll say, we want to go see a house. And my first question is, have you been pre-approved? No, but let's go see a house first. Well, for exactly all the reasons that David just mentioned, we need to find out how much house can you afford. I can't even. There's so many things that need to be answered up front, and that's why we want you to come in and learn the process, and then sit down with David and find out what he wants you to know. And that said, a lot of folks that we talk with are first-time home buyers.
Yeah.
So, what do first-time home buyers? Some of these things we talked about on our list up here at the top. What do first-time home buyers need to know when they're thinking about buying? What do they need to be doing to get ready to buy?
One of the most important things for first-time home buyers is their credit score and their credit report. Being a first-time home buyer usually means being a little younger, and they haven't had time, or they don't normally check their credit. I highly recommend a service like Credit Karma that's free, that gives you alerts, that allows you every month, every week to go check your credit. Well, a lot of people will say, hey, have you checked your credit lately? And they say, yeah, we have 800 credit scores. And then we check and they're 640. So there's a disconnect between what they think they have for credit scores or debt, because they haven't actually checked. The other thing is, there's a lot of things that go on a credit report that are inaccurate. And if you don't check regularly, we had a client called us today, checked their credit. They had 2 medical collections for $50 and $100. Obvious it was a gap in insurance or some billing issue, but it dropped their scores almost 150 points.
Oh, wow.
Because they were recent. And because they had already made an offer on a house, it was difficult to get them rescored in time, get their scores back where they need to be, because it requires resolution with the collections. The other thing about derogatory trade references on a credit report, if it happened 2 years ago and you didn't know about it, it's very hard to get off. But if you're checking your credit regularly and it just happened, vendors are much more likely to resolve or remove something if it just happened this month.
Okay.
So the recency of an event happening dictates how likely they are to work with you to get it off, especially if they get paid. So if it's a $50 medical collection just reported this month, and you call them and say, hey, we never got the bill, the insurance was supposed to pay it, here's the $50, they'll just take it off.
Great.
So that's a really important thing, is credit scores, because every loan that you can possibly qualify for and every interest rate is based on your credit score. And it's also based on your debt to income ratio. So this is a little trick we use. If you come to us early, and let's say you have 4 or 5 credit cards and you use them every month, but you pay them off. What people don't realize is you may have $200 worth of debt on minimum payments. And if you'd come to us early, we would have shown you the trick. You pay off the credit card statements before they cut. All that debt goes away, and your debt to income ratio is better because you paid off the credit cards before the statement cut. The statements are what gets sent to the credit bureau and what gets reported on. So you're not paying any more, you're just paying at a different time. And that strategy can give you 50 more points on your credit score, give you a quarter better interest rate. So these are the little techniques, if we have time to work with you, that we can really bolster your qualification and get you the best terms and the best interest rate for your new home.
Wow, that's good to know. That's really good to know. Let's talk about for a second, I know a lot of people have heard about the putting off your, what was it called, putting off your interest payment during COVID?
It's called
I'm
forbearance.
sorry, the forbearance.
Yes.
Your mortgage payment. And a lot of people I have found have the idea that somehow this is just going to be tacked on at the end. And it really worries me for a lot of these young folks that have mentioned that to me, because I'm like, no, call your bank, because I believe after 3 months it all comes due. Am I correct on that?
Yeah, there's 2 terms, and the one everyone hears about is forbearance. And the banks will allow you, based on the federal government's recommendation, to go into forbearance and not make a mortgage payment for 4 to 6 months if you lost your job and so forth.
Okay.
However, after that 6th month, all 6 payments are due. And that's the part that most people don't understand is, and they don't have that kind of money. If they can't make 1 payment, they're not going to be able to make 6. Okay. Right. So a couple of things that we can do. First of all, what you can do is get a modification.
Okay.
The difference between a forbearance and a modification is the modification will allow you a period of time not to make your payment, and they tack that onto the principal balance and give you a date where you start making payments again. Okay. But this is what people need to understand. It has a derogatory effect on your credit report, either one. a modification or an acceptance of forbearance will take you out of qualifying for a new house, even when you come out of it, because it's considered derogatory credit.
Oh my goodness.
So
how long will that affect them?
12 months probably at least.
Wow.
And it depends on which one they choose and where they're at.
Mm-hmm.
So getting a mortgage, you can't have any really late mortgage payments. That's probably the biggest thing on your credit is, what is your credit worthiness, and forbearance and modification. If you can avoid it for any reason, you should. A lot of people have 401k money they can draw from. A lot of people get nervous. They don't think they're going to lose their job, but what if they do? And we've referred them to a lot of banks that do equity lines.
Mm-hmm.
So if they have equity in their house, they'll take out a $20,000 equity line to see them through a certain amount to avoid forbearance, loan modification, and a decrease in their credit scores, which will impact them for years to come if they go that route. So what I tell people is before you accept forbearance, and this is tricky, a lot of banks will send you an email and says, hey, you're eligible for forbearance.
Mm-hmm.
So we had someone who was trying to refi, and they clicked on that link just because the bank sent it to them,
Mm-hmm.
and they actually got approved for forbearance. They didn't want it,
Mm-hmm.
but they got approved for it. Their credit report said they were in forbearance, and it took us another 30 days to clear that up so that we could refinance them. They went from 4.75 interest rate to 2.875, and they almost weren't able to do it because they didn't understand what forbearance was, and even though they were eligible for it, by clicking on the link, they got approved for it, and you don't want to do that. But what I tell everybody is if you're going to do anything that affects any trade line you have, a car payment, a credit card, or a mortgage, call your banker, call a trusted friend who understands finance, and ask them what the ramifications or repercussions would be before you do it.
Well, thanks for talking to our audience about
Sure,
it, because I think it's
very important.
It's very
critical
important right now. A lot of people just don't get it.
Yeah.
They, just like you said, they just don't understand what it is.
Yeah, and there's one other subject I want to bring up on that point. A lot of people are being furloughed, and there's different types of furloughs. Mm-hmm. So if you get furloughed and you're collecting unemployment, you can get a mortgage once you go back to work and get your hours back.
Right.
That furlough is not going to count against you because they understand with COVID. Number two, some people are having their pay reduced 25% during COVID, not furloughed, but just pay reduction. And if you can qualify on the reduced rate of pay, you can still get a mortgage, okay, and collect unemployment for that 1 week. And I found that to be amazing that companies had set up for their employees to reduce their pay so that the company could get through this times, but also allow their employees to collect unemployment so they were still whole.
Wow.
So that was pretty neat, and they're usually the bigger companies that have had the good advice to be able to set something like that up.
That is really cool.
Yeah, but don't and the other thing is, we had someone who lost their job and they really wanted to buy this house. They got a co-signer. So we used their credit and their assets, and their parents co-signed because they didn't want them to lose the house that they were under contract for. So there's always options if you have a good lender to figure out how to make something work. And I've been doing this for 20 years, and my team's closed over 6,000 loans, and no two are alike. So
that's the truth.
There
are no two home sales alike.
Oh my God. We could write a book and it'd have a lot of different chapters. But if you're not sure, just call and find out. There's no cost to get pre-qualified. There's no commitment. And the only thing that it will cost you is a little time, but you'll get so much good information, not just about your mortgage, but about your finances for the rest of your life. And I love teaching credit optimization. We don't call it credit repair. Credit repair is such a negative term. It implicates that there's something wrong.
Right.
Most credit just needs to be enhanced or optimized because they don't teach it in school. They don't teach you how to get 800 credit scores. Well, that's the one thing we're really good at. So even if you're not looking to buy right now and you say, well, my lease isn't up for 8 months, now's the time to come see me. Having 8 months to work with somebody, and make sure everything is perfect, that's the ideal situation. So it's not too early. It's never too early.
And back to the people that call us and they want to go see the house.
Oh my God.
They go see the house. Oh, I'm in love with the house. Oh, my credit needs some optimization.
Yeah, optimization.
Yeah. So we want to see David early in the process.
Yes.
So.
The other thing about coming early is sourcing assets. This is really big. We have people that may be self-employed and they have all their money in their business, and then when they go apply for a mortgage, well, you need a CPA letter to say that taking all that money out of the business isn't going to affect the business. Right. Or they have mattress money, they have gold bars or $5,000 under their mattress. All that has to be sourced, and it has to be put in accounts that can be sourced ahead of time.
Right. It has to be seasoned money. I've heard that several times.
Non-tainted. So we only go back 2 months for bank statements. So if you come early, we can make sure if you're going to sell that car and put money in the bank, you're going to do it early. We're going to make sure that when you write those due diligence and deposit checks, that they didn't come from a tainted source, and that you transfer whatever money. If you're getting a gift, we do all that money up front. If you're transferring money from abroad, you're getting it from a foreign country, which is always difficult. We want to do all that stuff up front, so when the underwriter sees the file, they see 2 months of clean bank statements with deposits that are easily sourced. What we love to see is just your payroll deposits. But when we see $5,000 counter deposit, that's a big red flag. So that counter deposit we want to make disappear by having it been done over 60 days ago, so we don't have to vet it.
Another reason to talk to David early. So as people are getting ready again, like we were talking about, to buy that dream home, we talked about them staying consistent with using their credit card and their credit and debit cards as normal. Avoid making large purchases or the deposit like you just talked about. One of the things that we see often, that we'll get somebody to getting started and they've gotten their pre-qualification or even pre-approval letter, and then they run out and
buy a car.
We had one fall apart about a year ago and I felt so bad. The young man went out and bought a diamond ring for his fiance on credit, and it bumped him out of buying the house.
Yeah.
It just broke my heart.
I know.
What other things should they not do?
Well, the first thing we tell people is, if you're serious about exploring the option of buying a home, is you're on credit lockdown. So the first thing you do is you call your lender, we check your credit, and then you follow our advice, okay? And this happens a lot too. People are buying a house and they start buying furniture for the house before they close. Your credit is monitored up till the day of closing. And the day before closing, if they pull and they see 3 inquiries from Bassett Furniture or Lowe's for a refrigerator, the process stops. All of the agreements for the purchases have to be provided, and any debt per month on those payments have to be added and re-underwritten. So a good lender will get you early and use the term credit lockdown, and you don't do anything unless you call me. And I don't care if it's July 4th sale and there's a great deal on it.
So in layman's terms,
yes.
This means you aren't getting payments on anything
until
you get your mortgage.
Now, if you want to pay cash, and it's pretty easy to say, look, if it's a first-time home buyer, tell your parents, to buy it, and then you can pay them back or whatever. There's always ways around it, or give them a $100 cash deposit, but tell them not to do it until after the closing. So we can walk you through there. There's nothing that we haven't seen before, but it's better to err on the side of caution and call us and ask us before you do anything, because underwriting mortgages now it's not as easy as it used to be. Everything is scrutinized. Here's another one that people don't know about. Underwriters are smart. They'll look at your bank statements and they look at reoccurring payments out of your bank statement that aren't on your credit report. And let's say, what's this $300 a month? And someone says, oh, I borrowed money from a friend and I pay him $300 a month. Boom, that's another debt we have to count. So one of the things we teach people is to go through your transaction history on your bank statement and make sure that we know everything that's on there, because just because the debt's not on your credit report doesn't mean the underwriter's not going to catch it as a reoccurring payment and count it as debt.
Right.
And because people set up auto drafts. So what we tell them is get rid of the auto draft and make that payment separately, okay? And so it's not on your bank statement as an auto draft. Or we can figure out other ways to do it. We have a lot of clients who are spouses and only one's on the loan. So we have the other spouse use their bank account to pay certain bills. But we have time before actually going live to go get those things done. Just lots of strategies you can use to get the job done, but we don't know what puzzle pieces we have to work with until we meet the client.
And the worst possible situation is when that person calls us and says, I'm crazy about this house, I want to buy it, and it's going to be in multiple offers, and et cetera, and there's nothing we can do to help them get ready faster. There's
not a week that goes by where I don't get this phone call. Hey, David, I was supposed to close Monday on a loan and my loan got denied. I really need your help. Talk about, pressure. It's like, okay, well, we can't close the loan in 2 days. So let me find out why they denied your loan? This is my favorite question. I had no idea. They told me everything was great and now they say they can't do it. Well, they obviously weren't.
There is a reason.
There is a reason. And we had one today that he was self-employed and he filed his tax returns as a W-2 employee. And when they went to verify his employment with his employer, they found out he owned the company. So he just filed his taxes wrong, and his CPA didn't do a Schedule C. And so he had to amend his tax returns for 2 years, and that takes
a while.
time.
So there's also things like we tell people stay in the same job. Don't be changing jobs in the middle of the loan process, right?
Yeah, we've had that come up where someone has a better job offer, and it will slow things down, but it's possible.
It is.
Typically, you can get a job offer letter, but it just requires extra time and effort. So if at all possible, don't change your job.
Okay.
But if you are changing jobs, the sooner you let your lender know, the better, because you can't the day of closing tell them and then have them adjust the application and do their due diligence.
I actually had that happen. It seems like we got to 2 or 3 days before closing and they were doing those verification calls there at the very end. And
well, here's the kicker. You get a job offer letter. Almost every job offer letter has contingencies on a drug check and a background check. So what most people don't realize is you need an updated letter from HR stating that you've satisfied those contingencies.
Oh, wow. Okay.
And that's the part where we need to educate and say, okay, you're not going to change jobs unless there's time for 3 things. One is if you get a first paycheck, that's good, because then we don't have to submit the job offer letter. We actually have a paycheck that shows you started. Number 2 is you're not getting a paycheck. That's fine. You can actually close with a new job 60 days before your first paycheck, as long as there's no contingencies in the job offer letter.
Oh, wow. Okay.
So again,
that's interesting.
Can't throw us a curveball that we don't know how to hit, but we just need to know about it in advance so that it doesn't come up last minute and affect your closing.
Right. So is there anything else that the people that are getting ready to purchase that we haven't hit on? Have we hit most of the topics?
Well, let's talk about the things that affect your ability to get along.
Okay.
Obviously, one is income and employment.
Okay.
So the first thing you want to do is every loan program has different employment requirements. For example, USDA, you need 2-year work history. So people say, I want to do a USDA loan, get 100% financing, but they don't have the work history or the credit history to back up that qualification.
There are also some income requirements with the USDA, correct?
There's income limits. Yes. So that's the other thing. Everyone thinks they know everything about a USDA loan. Most of them don't know there's an income limit.
What is that now?
And it's based on how many people in the household.
Oh, okay.
So if it's 2 people, it's about 82,000. But if it's 5 people, it's over 120 or something. But there's a template.
Okay.
But income is very important. Here's another thing. You got someone who's a musician on the side, and they have a W-2 job. So they're qualifying with their W-2. They don't tell you about their part-time income, but that part-time income shows a loss. So then that loss gets taken away from the W-2 wages.
Oh.
So it's something that, unless you're an experienced loan officer, you don't ask the question. What most loan officers do is they get the W-2s and the pay stubs, and they don't get the tax returns. And they don't see on the tax returns that there's a Schedule C loss for part-time income. And then they don't qualify. So there's all these things about it. So income's important to be vetted. And then there's questions about, can I count child support, alimony? What most people don't realize is you have to have a 3-year history of continuance after closing. So if you have a child who's 16 and at 18 the child support goes away, you can't count
it. I had that happen one time too.
So the income is very important, and we vet income. The next thing is debt. well, what debt is on the credit report, what debt isn't on the credit report. Can we eliminate some debt? For example, if you have a car loan and it's $600 a month, but there's only 4 months payments left, a lot of times you can not count that because it's less than 9 months that you owe. People don't realize that.
Okay.
So these are things that we look at income, we look at debt, we look at credit score. And we already talked about how we could take somebody's credit score and do a lot with it if we have the time. And the last thing is assets. A lot of people are like, well, I don't have the money, and then we discuss with them getting a 401k loan or a gift, and they don't realize the options they have as far as coming up with assets. This is one that I love. I want that North Carolina housing 100% second loan. What most people don't realize is you pay for every dime of those programs where you're trying to buy a home with no money out of your pocket. The fees are higher, the rates are higher, there's a payback of the second loan if you sell it within 5 years.
We've had so many that the people don't remember.
They go to
don't
closing,
tell us about,
yeah.
and we go to closing, and it gets uncovered 2 or 3 days before closing.
And they have to bring money to closing, and they don't have it, instead of getting money back that they were going to put on their new home. So these programs, to me, 3% down conventional or 3.5% down FHA. The only 100% loans that I think are great loans are VA and USDA. So if you can qualify for a VA loan and a USDA loan, they take a little longer to underwrite, especially USDA, because they have to go to USDA. And the other thing most people don't realize, USDA is funded by the government. And every August, September, they run out of money. And they haven't been refunded yet. And there's a 3-week gap where you can't close because your loan's approved, but the money hasn't come in.
Money's not there yet.
Which, based on our government, that's not shocking. But we know about it every year, so I always tell the buyers and sellers, hey, you're trying to close during that time where their fiscal year ends, and the loan might be approved, but you may have to wait a little bit for the money to be funded.
Yeah.
But other than USDA and VA, I would highly recommend trying to come up with that 3% option or that 3.5%. And the conventional limit or minimum is 5%. You can do a 3 or 5%. When you do a lower down payment, you have a higher rate and a higher monthly private mortgage insurance. So we always tell people in the long run, if you let me do the analytics, I'll show you why it's important. And most people figure out a way to come up with that money for the down payment. And they're a lot happier once they close that we talk them into an option that made sense for them long term.
Got it. Well, this has been great information, and I think we've probably we could keep going for hours, I believe.
There's a lot to talk about. What Ashley and her team does is full of intricacies as far as negotiating and what they do. And on the lender side, they can't do their job unless we do our job. And I'll only say, I've worked with Ashley and her team for a long time. They do things right. Having a realtor, a lender, and a closing attorney that all partner together, those are the 3 biggest people in making sure your transaction is smooth. And the lenders and the attorneys and the buyer's agents and seller's agents that she has that we all work together is definitely to your benefit. It's really ridiculous to think about trying to do it any other way. You really need a quality realtor who has a team of lenders and attorneys that they work with.
Well, and thank you for that. And I will also say that this is, as you can see from just this little short half-hour interview, David is such a wealth of information, and he's going to make sure that when it's time to close and your moving truck is full of furniture and you're supposed to close tomorrow, that you're not going to get a phone call at the 23rd hour to say, I'm sorry, we can't close. And by the way, it might be a week or it might be 2 weeks.
We have never missed the closing date because of the loan. Never. In 20 years, we have not missed the closing date.
And I can't tell you how important that is and why we value that with our relationship with David so much. And it's why when you come to me and you say, I really want to use Quicken Loans, Quicken gave me a great rate, or I really want to use my local credit union because I love my bank. Well, banks, their one thing is not lending. And you want to work with a local advocate that is going to be on your side, that is going to take care of you. You hire our team to advocate for you in the whole real estate process, and you hire David's team to advocate for you from the financial side and make sure that you are not in a situation where you're calling me crying at that last hour that it won't close and your lender has dropped the ball. And I cannot emphasize enough how many times I have had that phone call. And it's so hard for me not to go, remember the conversation we had in the buyer consultation when I said how important it is to use that local lender that we have a relationship with and that we trust and that we have seen over hundreds of transactions go perfectly smooth? This is the reason for this hour. But you can't say that at that point.
I know. Well, the thing you mentioned about banks do credit cards and car loans, and they want checking and savings accounts. The loan officers at most banks are salaried.
That's right.
And it doesn't affect their pay.
It doesn't
matter to them if you close or not. And they work 9 to 5. You can't get a hold of them nights or weekends. And, my cell phone, I don't know if you've heard the vibrations.
Yeah.
It's gone off about 5 times during this interview. But I tell my clients you can reach me till 9 o'clock at night, 7 days a week. I have a team. Even when we take time off, we're available, and we have team members that take calls. So accessibility, when you get paid 100% on commission, meaning if you don't close a loan, you don't get a paycheck, it makes a big difference in one, your ability to understand how to get loans closed, meaning you're a student of mortgages. You need to be really good at your job. Whereas the bank, they probably know the basics, but they don't need to know the rest because it doesn't matter to them.
And that's often where you see that ball dropped, where somebody didn't check, like you said, to see if they've got that side gig that's turned in as a loss every year.
Yeah.
Or any number of the things that we
It's that attention
about.
to detail. The other thing is most bank or a lot of loan officers, not just for banks, they don't have a team.
Mm-hmm.
So they may have 5 loans closing this month, and they're overwhelmed with collecting documents and ordering title and appraisal. And I have a team of 5 people. I have people that all they do is verify employment, order title, order appraisals, collect trailing docs. And that allows each one of us to have a smaller piece of a bigger puzzle and do a better job. And the reason we have a 5-person team is we realized to give the kind of service we want, you had to have it. Is it a big investment? Yes. Is it worthwhile? Absolutely, because we can close a lot more loans, we can give a better experience, and we can be more accessible not only to the realtors but to the buyers as well.
Funny you said that, David. If you look at our team too, we have your buyer's agent or your listing agent, the buyer's agent plus 4 other support that are
in this day and age with everything you have to do to get a loan closed, it's critical.
It takes that attention to detail, the team that knows what they're doing.
Yeah. If you guys called me and we're really busy, well, my team is in the office working on every single file we have. Allows me time to come here and do this and build these relationships. That's important, and most loan officers, they have a good month and they can't take any more phone calls. They can't help because they don't have anyone else helping them. And so this, as an ex-athlete, I love the team approach. It's just a lot more fun to have a bunch of people sharing in the success and the closed loans. And you end up, financially speaking, you end up making more money by sharing the profit, and you have more fun because you have a bunch of people backing you up. And it's just being by yourself and doing this business is very hard.
It is.
It's very frustrating.
Been there, done that. Don't want to go back. But what you want to see is our smiling faces at the closing table, handing you a key. So if you want a smooth, crystal clear, easy transaction, you need to give us a call when you're getting started. Give us a call early. And if you've got any other questions about mortgages or what that whole space looks like right now in today's society, give myself a call at 336-816-7818 or David at
336-215-5597.
And thank you so much for joining us for this episode of the Ashley Lay Real Estate Podcast.
Have a great day.
Bye.
Thanks for listening. This has been episode 5 of the Ashley Lay Real Estate Podcast. For more information on our topic today, see the show notes below. Also, if you or someone you know is looking to buy or sell real estate, give us a call at 336-816-7818.